Okay, so this is also a very important topic in price action, which is the transition and the range. So far we've been talking about, I want to say, three main concepts in price action. We talk about market areas, the buy market area, the sell market area, and then we talk about intervals, the intervals of the final strategy that we are going to apply. Those are the intervals. But now, what about the transition? What about the transition? What about those moments where you do finally have the important lows and the important highs, and the market is about to change from buyer market area to seller market area, and the opposite? Of course, under macroeconomic conditions, under geopolitical situations, under war situations, economic situations, and all of that. So market areas are meant to be completed. And that means once we start in buyer's market area in a year, it's supposed to be in the market and the buy market area the full year, unless something changes in the middle. And of course, since pandemia and all of that, we've been having a lot of changes in market areas. Quite unusual, by the way, but it happened that we had the market trading on buyers and then changed it to the sellers. The market from the sellers changed it to the buyers within 3 months. That actually is not as common, but it can happen in the future as well. So market areas are meant to be completed, and other fundamental changes can switch roles. Like I said, one market can be the seller in the same year, the buyer can be the seller can be the buyer on the same year. Transitions are moments that last days or weeks, and the transitions are where most traders get caught up in a problem because they don't know how to identify the transitions, and you get stuck on a transition without knowing what to do and what's going on. For example, if you have euro dollar trading above the 110, once it enters into transition from the 108 to 109, that's the major transition on euro dollar. And then after the transition, it can either go back to buyer market area or get down to seller market area. It can happen both ways. That is why it's considered a transition. It can go from one area to another, or from the high to the lows, the low to the highs, and changing market areas. Okay, so our job is to understand the possible transitions to react fast enough to market area changes. And again, this is from my book, and I mentioned the transition from the euro dollar, the pound dollar, dollar Canadian. What else? I think some other instruments. I kind of quite sure. I'll show you the NASDAQ, the NQ transitions. Also, I'm really into NASDAQ now. S&P 500 also has transitions. But again, the index, I mean, the S&P, the NASDAQ, those are not market areas instrument. Those are trend. Remember, we talk about it. The trend instruments. It always tends to go up. The index, all index. But what happens when we have a crisis? We have a reset in the economy. Then it's going to go down, right? And that moment when it goes down, we are going to experience a transition that we don't know if we're talking about more lows or we're talking about the end of the crisis, the end of the correction, and then buyers back again. That's also very easy to identify the transitions on the index. Gold has a transition as well. So people can say, well, is the concept of consolidation, you might call it that. But when you consider that as a transition, because you don't know if we're talking about new lows, new highs, the switch of market areas, and that makes it more fascinating to get ready and to take advantage from the transition, because the consolidation, it's not telling you anything. I mean, the market consolidates every time. It's not the same concept. transition is different. We're gonna see it in the market within the next few videos.